Welcome, dear future millionaires, on a new episode of Crypto News. My name is Mr. Krypto. I upload videos every day and show you how to make money. In this video we will talk about the Fear and Greed Index and Binance. The Fear and Greed Index points to a possible Bitcoin price fall. Bitcoin price has recovered somewhat this week, surging 2.5% to $16,940. But the Fear and Greed Index suggests that crypto investors remain fearful. The cryptocurrency sentiment barometer has remained in the fear zone over the past few months as the industry has faced both internal issues such as FTX's bankruptcy and macroeconomic factors. Most recently, BTC price fell after new U.S. labor market data was released in December. Overall, the price of the largest cryptocurrency by market cap has fallen more than 70% over the past 12 months. Investor sentiment is an important factor in the financial market. Historically, the prices of assets like stocks and cryptocurrencies have been very sensitive to whether the general public expects prices to rise or fall. The Fear and Greed Index has historically established itself as a good barometer of sentiment. It measures whether investors are feeling more fear or more greed. Regularly updated by CNN Money, this index tracks the performance of key indicators such as the VIX index, stock breadth, market momentum, stock price strength and breadth, put and call options, and safe haven demand. The index ranges from 0, extreme fear, to 100, extreme greed. The current reading is 44, which suggests that fear in the global financial market is relatively low right now. Things are a bit different with fear and greed for cryptocurrencies. This variant takes into account other key factors such as Bitcoin dominance, market momentum and volatility. For the past few months, the crypto fear index has stayed below 30. Alternatively, investor sentiment can be measured by how large the inflows and outflows are on crypto exchanges. Cash inflows tend to increase when investors are greedy and vice versa. Data compiled by DeFi Llama shows that most exchanges have seen significant outflows over the past few months. One of the reasons for investors' fear is the uncertainty about future Federal Reserve decisions. Data released on Friday shows the U.S. economy added over 230,000 jobs and the unemployment rate fell to 3.5%. Therefore, there is a likelihood that the Fed will raise interest rates further. Of course, FTX's bankruptcy and concerns that the situation could be repeated on another crypto platform also remains another major factor in investor uncertainty. As I wrote in this article, there are currently concerns that Huobi may go under. Binance has also faced negative headlines lately. Binance needs to change. That became more than clear last year. There were warnings from supervisory authorities, for example in the UK and Japan. Since then efforts have been made to obtain the necessary permits and licenses and progress has already been made in this regard. But the negative headlines don't stop. In November 2022 it was announced that Binance was said to have laundered around $8 billion for Iranian customers. The company is very open about the allegations and promises to improve. However, this does not seem to be satisfactory, because investigations have been started in the USA. It is again in the room whether Binance helped with money laundering. It is probably not yet about concrete allegations or the filing of charges. If the reports are to be believed, the public prosecutor's office is currently busy collecting material on new leads. In the course of this, U.S. hedge funds probably receive subpoenas from the investigators. The general investigations against Binance have been running for some time due to various suspicions. Binance has seen a major loss of trust and the same is true for all other exchanges. Customers are withdrawing huge sums and while there has been sufficient coverage so far, the drains are clearly visible and serious. Should the U.S. investigators actually file charges in the end, it would be devastating for the crypto market. After all, a lasting recovery from the ongoing downtrend is only possible if the market's infrastructure is preserved. Binance isn't just the biggest exchange, it's at the center of everything that's happening. Staking, mining and DeFi are just some of the products that are offered outside of the exchange business. There are also various investments in companies and crypto projects. If the fears come true, the market could be in for an even bigger tremor than the FTX scandal. Thanks for watching the video. Until next time, future millionaires! And Quant.